6:23 a.m. Market's going to open in a few minutes. How about that? And it's 4/5/2012, April 5th. And the expiration for these weekly premiums shall come to an end today. The market has yet to open. We are going to talk about the Google trade. We're talking about the 6:30 call on the drop down bid. And what we want to do is we know that 420 was the initial low and that high was 990. Not only do we know that, we know that there's a 5.7 ratio in the contract. Now, 1360 was that markdown with the $2 closing print to the positive, even though that the general weekly expiration today was marked down 740. So what? You're buying wholesale and you're selling back. I'm going to give bids on this. If they want to drop down that bid, my first bid is going to be at 560 and 580. Now you close that. See, you're gapping down slightly in the ratio, but we're going to see on the opening bell how much of that premium that they take out. So what I really will tell MMT is to throw the best bid at 370 for the moment and work it on up to the 450 area on another bid. And let's get right there in those ranges. But just remember, we're going to open up in 5 minutes. And at this 6:25 a.m., you have only 5,900 shares traded on the name. And we're going to make a market. Now, on the 645 put, that was in the money that had the ranges the other day. Last print, close, $10 because it reset. We're close to the open. And that's going to be the put side. Now down over here on Apple, and we'll be giving out those live bids on the put side. We'll be looking for Google to trade up to at least the 639.50 area. Once it hits that opening bell support, price action, speaker number 1, that's where you're going to make that heavy engagement. And you're going to watch that diamond pop to the right side of the price action, confirm it, and then it just takes off 17s and doesn't look back. Once it hits that lower pocket within that 15-minute opening bell, price print. That means in that first 15 minutes that there is a high-frequency computing model machine that goes on in the ECN, in the pit for the options, and the ECNs in the equity, and how they're going to be tied together. Not only that, I got that 7:30 call yesterday on that price line trade. And I'm going to give a bid out right here on that 635 put. That thing has been paying every day when this hits the wall of resistance and rolls over. Now, after making that last high, do we get a run and break that high today? If you clear 1.5 delta, you will get back up to that last 52-week high the other day, and the drop down bid on that call side, which is a 610 call, which was tradable off the bottom for today. And then, of course, you'll be watching that 45630 put over here, 660 by 685. They were marked. They were great trades. They shot straight up in price and then deflated yesterday, and they were perfect. So when Apple was coming down on the short side, those puts ran up. They put the high in, and the calls put the bottom in, and making that transaction right then and there is what you need to be doing on speaker number 1. Throughout the day, and we're going to open in 2 minutes, and this is all done in pre-market, and the time is 6:28. So we'll just run it right here. We'll be watching this as this gap increases, as the live market gap increases, going into that 2-minute opening bell, they're going to take the premium down here, MMT, out of the put. So on that 630 put, and this is live, remember, this isn't after the fact. If we run up toward the half delta 3/8 half delta mark, that's going to mark this down, MMT. Go ahead and put bids out here in case he runs it up to that right below that 630 mark. If he shoots it straight up before he reverses it, put the bid down here. That last print was 685. Line that lower market at $2.80 here and now. And we open in 1 minute. That's on that side of the market. Now, as far as that 635 put goes, and it opens in 1 minute, here's what you do. That last print was 1125 because it was. And with that gap open, it has to be a runaway gap, not a sell gap, a runaway gap. And if we can run that right up to that 630 within that first 9 minutes to 15-minute opening bell, that's going to take that down to wholesale. Here it is. Now, put those bids down there, MMTs. That's it right there. Keep the lower bid. Here's that 630 put. They're taking that premium out, just like I have in the pre-market, still on the same rail. Down 245, 685. Watch that area of resistance. That's that first hammer right there. Up to the Google trade. Look at over here. I got a 630 call running in that 1 minute opening bell. Look at over here. 645 puts. Look at it. Look at that 645. Look at it. It's got a bid of 1280 by 1380. Speaker number one. They're inflating. This one over here. Look at that. We made a low. Look at that. You got that reversal. You got that dollar rule reversal. This is live on that opening bell. Not even the first minute price print. 11 contracts traded. Zero volume over here. Look at the Apple pull back. Look at the put side, make that low. Look at that $2.15 markdown to that wholesale bid at 410 on the low in that first minute print on a weekly expiration morning. How to get the wholesale bid here. The reversal is $2. So in that 1 minute print, they have decided to sell short as Google struggles for the high and is reversing right now, but that put side is inflated. The close was 10. It's $12 by 1370. Stay out of the way. If you're going to bid this one here, you're going to want to have bids out just in case. When we bounce off support, we said look for the 639 handle. You got to 632.99, but I want to tell you something. When you hit that support level, you better get ready to pull that trigger, because if you don't, that trade will leave you behind. Once we get that intraday low volume, you finally got 10 volume over here. There was a 13.30, 13.60 on the way out. That was a $3 bell ringer profit with a 14 penny range in the actual contract in that less than 3 minute opening bell.